Good morning, everyone, and welcome to the On Time, On Target, a morning, a brief, a Friday, January 22nd. Have a great show for you today, talking about something we haven't talked about in a while, and that's how do you make money in a down market. And today, if you've looked at the futures, you can see that they're down almost 1%. We've kind of been on fire. Things have been straight up. We had the inauguration. Everybody's excited for change. We talked about buy the rumor, sell the news, meaning you look forward to the big event, and then you get to the event, which is the inauguration in this case, and then the market sells off after that. So not necessarily calling a continued sell-off here, but if you do think a sell-off is coming, there are ways to make money in a down market. So that's what we're going to talk about today's show. You're going to hear about things like gold, Bitcoin, shorting, volatility, bonds. All of that stuff is what we're going to peel back for today. If you're joining us on replay, thank you for subscribing. Make sure you hit the notification bell so you get notified when the new episodes are coming out, which is every day. If you want to join us live, it's $25 to be in the room. There's a Q&A window and a chat window, which you don't see, but $25 a month to invest in yourself to make yourself a better investor. And with that, let's go ahead and get started. All right, to welcome back everyone. Here is the overview sheet we're going to take a look at today. Make sure you have your chat window open and your Q&A window open as well, and then make sure you have it set up with a call sign. All right, as far as a standard disclaimer applies, this is the financial education presentation, so you have to do your own due diligence for acting upon anything you hear this morning. So here's our mission objectives for today. We're going to grow our money, protect our money, and live off our money. Specifically, we're kind of talking about protecting our portfolio by picking up some instruments. You really don't go to cash and then short the entire market if you think it's going to go down. There's a time for that, but generally we're talking about protecting our money by what instruments can you use in a falling market to make money with those to be able to offset the value of your overall portfolio, which is dropping on a down day like today, where the futures are, close to a point in the red. So we talk about those. Those are not right for everybody. A lot of people don't mess with it at all, but educating yourself a little bit can show you how to make some money during these times, or any time with a continued sell-off in the market. And we'll go back to obviously March of last year and show you how some of these instruments performed in a market that was falling off a cliff, right? And then the question today is going to be, what is a covered call? We're going to go into the mechanics of that. It's kind of an advanced concept, but if you hear that every few months or so what it is, then you'll understand what actually is going on in your portfolio. If you happen to use these, then you know that I like them. All right, for our flow today, we're going to go long, short, open, short, long. We're going to go take a look at the market review around the world. We'll come back to the US, look at some headline stuff. For our long-term investments that we're going to look at that perform well when the market's dropping, there's 6 of them there. We're going to talk about all of them. And Predator, I see your comment there. I'll get to that in a second. We'll get into the short-term execution. Surprisingly, there aren't that many things that are falling off a cliff this morning. So we do have IBM and Intel to the downside. Let me hit the chat here. I see a couple of folks just popped in. There you go. There's our shorts that are showing up in the chat. And then, of course, long DXX. Since Predator, that's your question. We'll talk about that in a second. Contingencies are standard. Reach out to me at the email address below, and then academic resources are available at the website. All right. Always wondered about, just this in the chat, about just buying a VXX in 12 to 15 range, waiting for the eventual surge to 25 and selling as a trading strategy. You can do that. There are people that do that. You will see that there's a house of pain in the short term if you do that, but I'll try to remember to come back to that when we pull the VXX chart. All right, let's go over to TD Ameritrade and take a look about where we are with the market. It's always good to zoom out. And why is this not working? Might not be going to TD Ameritrade because it is frozen. There we go. Tried to put in a IBM over here. That's why it's frozen. All right, so back to where I was. So here's where we are with the market. It's always good to zoom out. Even if we fall 1% today, 3%, honestly, it's no big deal. We're going to go back in time all the way to where we were like a week ago. So nobody likes big red numbers, but it is not that big of a deal. Realistically, we could even correct. Remember, correct is 10%. We talked about bear markets earlier this week as being a drop of 20%. Don't see that really coming, but we could certainly correct a drop of 10%. I mean, this is almost a straight line up all the way up to 384, right? So kind of didn't expect to be here anyway. So if we do fall back to 360, 340, it is what it is. Things come back in and you start looking at buying more again. Zooming in on the 5-day chart, that's Palantir. So we'll get rid of that and go to SPY. The big run up, even if we fell down to 375 today, we'd be where we were, Friday, a week ago. So, and that would be a pretty decent move down if we went all the way down to 375. So don't sweat the red that's in the market today. As far as setting up for our day trading, those are some of the instruments we'll take a look at once we get back to that. Okay, let's come back to CNBC. We'll take a look at the futures. I'll show you how red they are. There is what we're looking at. Again, Dow 250 is where it was out earlier, so it's popped a little bit up from with that. Let's take a look at Asia, red across the board. Europe, red across the board. US yesterday, NASDAQ was up. Apple hit all-time highs yesterday, so good news story there. Amazon was on fire too. You see the volatility, that's this morning, so creeping up 7% already. You mentioned 12 to 15 and then eventual surge to 25. Well, you'd be almost there, right? So we'll pull that chart and kind of take a look at that strategy. Bonds off a little bit, not notable. Oil down, I guess 2.5% is pretty notable, but I wouldn't sweat it till it drops below 50. Then I'd be more concerned about it. Precious metals selling off, so pretty much selling off across the board. And then good morning, Bitcoin up 10%. So that is one of the ways we will talk about is both gold, which happens to be selling off this morning, and then Bitcoin, which is another way to work opposite the market, things that go up when the market goes down. All right, back to the headline review this morning. Yep, Bitcoin briefly tumbling below 30 and then already back up to, what did we see, 32 already. So not worried about Bitcoin. If it's stressing, if it's in your portfolio and it stresses out, you got to sell. Period. Dot. If it's stressing you out. Otherwise, you buy Bitcoin and you just hold it. It's kind of like gold. It'll sit there and do nothing, and then it goes, and then all out of nowhere it screams higher. So we'll be watching it every day like we always do. All right, more executive orders coming. Fauci talked forever yesterday, it seemed. Here's IBM tank 7%. They're actually down more than that. That's our number one short for today. Just a company off the rails, and even the new CEO is not. They're supposed to turn everything around, and so far it is not happening. Mega Millions is out there, almost $1 billion. Not that I say, hey, you should play that stuff, but I am in a group that invests in that. So we're putting money at it. That and the Powerball, which already was won. All right. So let's come back to what we're going to talk about today for our instruments that operate well when the market goes down. So here's short. So if you're in an IRA, well, first of all, you can short the markets. We're not really talking about shorting today. That's what we do on a daily basis. But for trading, but for a long-term short, if you short, again, you're borrowing the stock, then you have to pay for the price. You're basically paying a loan level price while you have it, and then you buy it back later. So very expensive strategy. If you're an IRA and you just want to buy something that will act opposite the market, you buy SH. Look at the house of pain SH has been in. while the market has gone basically straight up. So anybody who's gotten into this has lost money in the past, 9 months. Now we talked about, so that's an option for you because it is pretty low. Talked about the Predator, said, hey, let's wait till it gets down to 12 to 15 and then buy the VX. Yep. Yeah, maybe it touched 15 and somewhere here. You might have to bump up your numbers because it hasn't quite hit it. But look at all the volatility coming out of the COVID sell-off, and then basically a huge drop all the way down to where it is. Can you go long ball here since we're at all-time highs? Yeah, you could. I was long ball going into the election somewhere in here. I don't, may have made money, may not, I don't remember, but not what I was expecting. I was expecting a lot more volatility, and it just didn't happen. So when you're wrong, you have to go against it. Gotcha. I'll take a look at, I have a 18-month graph next. So let's go ahead and take a look at that. Going over to TD Ameritrade, where I have several of these things pulled up so we can talk more about it. So here's short in the upper left. So here's your spike, went all the way up to 35 in SH during COVID. VXX is like Predator was talking about, is yes, it hit it back, volatility continued down. Here was your 12 to 15 range that he's talking about, and then sell at 25. You could do that. It could come out. But also when you had to look at the volatility that was induced, when volatility goes up, it tends to spike. So you might want to hold out for a higher target. Obviously, you can't just set a price target of 80 on the VIX and think you're going to get there. But you'll see that if it drops all the way down to that range, you might even put a 30 spot as your exit point, just from looking at the graph there. So could that be setting up? Yes. In this situation, if the market starts to sell off, it never would have hit your trigger to buy at 15, but you can give it a shot. I'm not buying for the book. I'm not buying VXX here today. I might, depending on what goes on this weekend, if I think there's a prolonged period of negativity. You can see that bonds, which are FIXD and SPLB, tend to offset the market. So when the market's going down, the bonds generally go up, except for COVID, where everything's sold off. I mean, these are people that are logging in, hitting right click, sell all. So they're selling bonds, gold, everything to go to cash, because remember, the world ended a year ago. But then it didn't. And then we printed money for several months on end because it didn't. So, so that's another way to do it, is to shift to bonds. You see both of these instruments here pay a monthly dividend. So they treat it like it's like a bank account money. So if you have more than 50K sitting in a bank account, you need to get it into your brokerage account and make your 3.5% paying out monthly. Another hedge is gold. You can see the price of gold has been going up, even though the market's been going up. But that's generally where money flows out of the market and into precious metals. And then, of course, there's Bitcoin, which is where it's been kind of on fire lately. But then when the world did not end at the inauguration, we didn't have any more crazies in the Capitol. It sold off a little bit. Is this a buying point? I think so. I think if you buy here, again, you got to close your eyes and just hold it. But I do think it's got a path up to 100 to 100,000 for Bitcoin itself, for the trust, which is GBTC, a clear path to 100. So hold it, and it's going to move 10% in a day, but you just can't sweat that. All right, let's take a look at a couple of shorts here. The only one I'm going to pull up on to check the volume is IMMP. See if there's any volume at all. 70,000. Okay, that is good enough for us to hop in if we need to. All right, so going over to TD Ameritrade to get set up. You can see in the chat room, so somebody joined late here. Let me get the, there's our long and our shorts we're going to take a look at today. Again, not going long anything right now because the futures are down so big. So you have IBM, Intel falling like a rock. Those are both earnings stories. And then this IMMP, which is the most intriguing to me, is GSK pulled out of a joint effort forum. So that's the negative headline that's out there for IMMP. So all of these are obviously shorts to the downside. All right, give me a second to get set up for the market open. Hello, everyone. Welcome to the On Time, On Target play of the day. We have 10 seconds to the market open. The futures are down big. As you see the SPY here in this first pane off to the left, bouncing a little bit, but we have three shorts for you: IBM, Intel, and IMMP. There's your opening bell, all of which we're looking to take short, all of which meet, if you look at scan across the top there, 8 to 6 and 6% down across the board. So let's zoom in on these. Intel's fallen like a rock, so is IBM, and actually so is this one. I'm most intrigued by this IMMP, even though the volume's lighter. So I'm going to look at taking it pretty quick with a 5-cent stop. So I want a little bit more here. You can see the high of the day is 310, so I'd put us at 311. So just want a little more volume in IBM. Goodness, just terrible company under a new CEO. Okay, so here's what we're looking at is shorting IMMP. Again, you can load up on a ton of these shares. Just remember, we're looking at a 5-cent stop. All right, if it goes down to 308 here, we're going to wait till 307. 307, and then we're going to use a stop up at 312. All right, these both moved down pretty hard initially, especially Intel had this move all the way down there to 57.78. This one's kind of been on fire. They have a new CEO, so it could stripe down, but it could also back up. I think IBM's a better short in the situation. You also see the market kind of climbing back higher from where it was. So right now, still leaning towards the this short over here in IMMP. That's a challenge because it just set a new high of the day. So we're going to have to watch that for a second. So if we did a 314, that'd be 309 as far as our entry. I was going to say I have to go 308, and then it hits 308 right there. Just not enough volume in this to be able to get excited. I'm not sure we're going to take that. All right, I'm going to peel off of that a second and look long. Yeah, it just moving 5 cents on a, just a tick there. Kind of want to short it up here, but all right, got to switch off to look at some other stuff for a second. Let's look at the VXX and see if that's holding long. May cycle back to that IMMP, may not trade today. So here's your VIX. Spiked up to 17. It's actually not going higher. Intel's kind of powering higher. Let's look at CCIV, which is a long. It's DDIV, never mind, CCIV. This is a SPAC. It had spiked up earlier. It's kind of selling off. So, all right, I'm going to come back over here. Let's look at an entry at 311. Excuse me, 310, not 311. That's where it's at. 310 with a 4-cent stop up here to 314. So these are going to be kind of quick targets. I would not take full size here. If your normal R is $100, I would do a $50 R just because of the volume. But waiting for 310 on the short side. We're going to go ahead and take this trade. I'm just making a tick mark there. And our stop's going to be 4 cents up here, 307 down there, and then 304 is going to be down here. So again, we're not in this yet. We're waiting for it to trigger, come all the way back to 310, and then start its selling from there. I'll draw out these lines a little further if it actually triggers and hits it. All right, going to look on another screen to see some other stocks in play. So that has not hit yet. Clickstream on the way up, another 7% up today. Intel 5%. There it was. Crap. I knew as soon as I looked away it would hit. we didn't take it here, so we need it to back up to here. If it just goes, then I missed it. There's the 310. Let's take it right. Oh, this thing's flipping around. Again, you got to be patient. If you're in it, you're in it, and get out at 314 above the high of the day. If you're not in it, though, don't take it until it comes back down. Yeah, this is flopping, so never mind. We're not doing this. Could you take Intel here and ride it on the way down after it's sold up? Yes, I would not take it here. And let's go back and see what IBM is doing. Yeah, it had that move up. You'd had to take it up in here. So really no entry there either. So don't like any of this stuff, so we're not taking it. Again, if you are in this trade, because it did hit a trigger while I was looking away, hold true to that 314. We're at the high of the day right now. If it does bop up to 314, you got to be out. If not, just hold that trade. And then again, you're looking for the 3R point of around $3 was your actual exit point. So if you entered at 310, down to 3, it'd actually be 306, 302, and then 298 for your exit. So, and there it is, 314, you'd be out. So, all right, let's not going to trade today. Things are all over the place. So let's take a look at what's going on. All right, you got AMD or Clickstream up. AMD is up. There's your Bitcoin. Pull that chart real quick. So again, House of Pain finally getting some love. So again, if you take the price and add 3 zeros to it, that's the approximate price of Bitcoin at any point in time. There, I'm looking back at the chat. Yeah, Predator's comment is it can be a pro move to not take a trade. And I was talking with somebody else who wanted to start trading it. It's like if you're a trader, you have to trade, right? So it's kind of like if you sell T-shirts, you have to sell T-shirts, right? You can't pivot into something else, but you do have a choice. In not only trading, but in investing, you know, there's no called strikes, if you will, is what somebody said. So you can look at pitches all day long, and the only time you get a strike against you is if you swing and you miss. So you really can wait for your sweet spot. We wanted the perfect setup. I didn't say anything I liked with the setup. So I do appreciate that comment. Now, but if you're a trader, like, you know, this is how you feed your family. You have to sit around and surf all day long and find something to trade, which again, I don't do that. We're generally out of our trades in 15 minutes anyway. Okay, back to Bitcoin. Bitcoin on the rise here. I do think it bounces off of the 30,000 level of actual Bitcoin, but you know, this level, if you will, for GBTC. All right, Workhorse is up again, waiting for that Postal Service contract. Revive Therapeutics, that's a psychedelic name. Some folks are in that. That's up today. Palantir up, Disney up. Some other names there. Let's switch over to what's down. IBM, that was one of our shorts taking a look at. That probably would have worked from the entry point. Where is Intel? I don't think I have any Intel. That's why it's in here. You're like, why would I have IBM if you hate it? Well, you know, if you have a retired IBM exec that's got a truckload full of this stuff at an entry point from 20 years ago, you just can't sell it for tax purposes. So that's why you see IBM on here, even though I hate it. All right, Laser, AV. These have been a couple names that have been hot lately. GLD selling off. That's kind of surprising in a red market that gold would be selling off. But I think Bitcoin is just poaching money off of GLD left and right. So plenty of names down today. Again, don't sweat that. Keep the bigger picture in mind, which is this one. That hey, if we sell off, yep, you're going to see some big red numbers, but don't sweat it is the point. All right, let's go ahead and take a look at covered calls. So speaking of a situation where you can't sell, okay, so let's talk about the IBM situation. So You have a ton of it. You have an entry point that is back, IBM's at a 120 today. Say you have a $20 cost basis and you have several $100,000 worth of this stuff. Well, if you just straight sold it because you know that IBM is going down, you're going to have a huge tax bill, and you may not want that huge tax bill. Now, you can argue, well, if you know it's going down, should you sell it and pay the taxes instead of losing all that money in value? The answer is yes. However, that can be a hard trigger to pull because you don't know that it's going down. You don't have that crystal ball. So in a situation of that where you have something or you don't want to sell it, or like Apple yesterday, it's probably a better situation. Apple hit new highs yesterday. Almost everybody in here has Apple. Almost everybody that invests has Apple, and they should. That's smart, right? So, but when it starts pinging off highs, you may not want to sell. You may just think, okay, it's overpriced right now. So say your Apple, I'm going to pull it up on another screen so I can talk exact money and see what Apple is at. AAPL, boom. It's at 136. It hit 137.30 yesterday. So what you can do, you have to have 100 shares of it to be able to do this, but you can cover it up with a call. So you sell the call. You're not buying the option. You're actually selling the option. And you can put a strike price wherever you want because you're selling it. So it's like you pull out the old piece of paper and go, you know what? I'm going to hedge my bet here by saying I want to basically sell somebody the right to buy my Apple stock at 145 bucks a share. So you pick, it's at 136 right now. You go, okay, I don't think it's going to go over 145. I think the next move's down. So I'm going to sell a call. And I'll put a strike price $10 above where it is now. I'll go out a couple months and somebody's going to pay me a few $100, maybe $1,000 for the right to have this piece of paper. And once I sell it to them, they have it. That means they can buy your shares for 145 a share. If they do that, if the price isn't up at 145, there's no reason for them to do that. And the call will expire worthless and you keep the money. If, however, you keep the money either way. But if, however, the price does go up to 145, you simply buy that back before the price gets there and you write another call up at 150 or 155. So you have these calls out there that basically you just keep rolling them out and up, out in time and up in strike price to where it's just covered on top of wherever you're holding it. You can do that for years. For some of the folks who are with me, I always have Apple covered, right? The calls when we sell them are very lucrative. And even when Apple goes up, I just simply move the call up because stocks don't go up forever, except for maybe Tesla. That's a joke. But it won't go up forever either. But by covering up your position, you are making money off of that position. It's like the fifth dividend, if you will. So that's my explanation. Let's see what the key takeaways is, are that they have listed here. Popular option strategy to generate income. So remember, as soon as you sell it, that money is yours to keep. So if you have 500 shares of Apple, you literally can go online today and sell a call for probably $5,000 and literally take that money, send it to your bank account and go on vacation. Now, that call's out there. So it's not free money, but if you pick the right strike price, it literally is free money. I mean, you're getting money in and then you have to move it if it hits that strike price. So that's why this, you're going to see me cover up. I have several positions covered anyway. But if you have a long-term hold, like if you have Apple for 20 years, if you constantly have that call out there, you're going to bring in an extra probably $50,000 of holding holding the whole time. So holding a long position in the stock. So yes, you have to own it. So 100 shares of Apple is obviously $13,600. So, and you need to diversify. You don't just hold one stock. So you have to have a sizable portfolio to do that. All right, let's see. It'll limit your potential upside profit. Yes and no. So, and it doesn't offer any protection if the stock price drops. And you don't cover up a position if you think it's going to scream higher. You cover it up because you say, okay, Apple's at 136. I actually think it's going to go back to 125. So you could sell it and try to buy it back. Danger, danger. That's a tax event. Or you simply just hold it and cover it up And then you're happy if the stock goes higher and you have to move your call higher, then you're happy. If the stock drops, well, at least you're offsetting, you're making the money off the call to offset the drop in price. But if you're holding a long-term hold like Apple, where you plan to buy it and hold it for decades, you don't sweat the drops in price. You just use a covered call to make money along the way. All right, they can be very confusing. There's a 7-minute video if you want an explanation, which I'm sure is better than mine. If you want to look at how the math works behind a covered call, here's a chart for you. Have fun for that. We're not going to go into that, especially on a Friday. Here's an example you can walk through. Again, this is Investopedia covered call. It gives you a better explanation than I ever could. Risk of covered calls: if you're holding a naked call, there's a lot of risk. But if you actually own the stock underneath it, then a naked call is where you don't buy the stock. Well, if you think Apple stock is going higher, buy the stock, don't buy the call. Why would you play the options game? Just buy the stock and simply hold it, is my philosophy. There are people out there that are options pros that want to do that, but 80% of options expire worthless. So I'm a seller of them and not a buyer. So, all right, let's take a look at, I'm just looking at other names. Apple is up today. IBM down 10%. Disney is up. Tencent Holdings is up. So there's a few things that are up today. Again, the overall market, NASDAQ is almost back to even. Everything else is a 0.5% in the red. So we'll see how today works out. All right, thanks for the comments today. And with that, I'm going to let you guys go, and we will see you guys back on a Monday. Bye.